Good afternoon, or I guess we're pushing evening, so we'll call the Housing Authority of the City of Kyle meeting to order. It's 6:14 p.m., and we will start with roll call.
Harper,
Here.
Kaufman,
Present.
Lopez, and Salazar.
All righty,
They'll both, Lopez will be in shortly,
perfect,
in about 15 minutes.
perfect. All right, so next up is, we'll go to citizen comment. So it is 6:14 p.m. We'll open citizen comment. And I see no one raising their hand for citizen comment. So it's 6:15 p.m. We'll close citizen comment. And next on the agenda, we will move to the management report by the great Steve.
Thank you. Just some general items. The Stryker partnership still hasn't closed. Would you? Yes. These guys think I'm BSing them.
That's actually why he's here.
Yeah, that's one. Okay, so, I'm gonna give you a visual, but, please know this is indicative of the broader area. Sometimes it's easier to find, content for larger counties, and this is a good visual for it. So while I recognize we're in Hays County, I'm giving you information for, William Barrett, Travis County.
All right, thanks, sir.
So something's happened here over the past few months. That's actually the reason we do this. And what you have is a chart of evictions in Austin and Travis County. I've looked at, the visual isn't as good, but I've looked at the data for Hays and for statewide, and it's really similar. So in apartments, there's generally a spike in delinquencies at the beginning of the year. So you come off the holidays, and it's normal.
Right.
Oh, you know that.
People rather buy Christmas gifts than pay their rent.
Yeah. And so in this case, what happened is in February, that's when some delinquencies hit the property. And when that happened, it went from, they were running about one delinquency, so call it $1,500, give or take. And in January, it went up to about 12,000. And then in February, it went up to 28,000. That was the high point. It's continued to come down since then. And it was just bad timing for the equity partners in the closing of the deal, because they saw that increase in the delinquencies and they wanted some assurance that it would continue to come down. So they looked at them again in March, and they had come down. It went from 28 to 16, I believe. And then it's continued to come down since then. So the reason they didn't close is because equity wanted to review it and make sure that those delinquencies were continuing to come down. On my way down here, I got a text from Stryker that equity committed to closing on or before the 10th, so April 10th. They want to review delinquencies again in April, but that will affect the equity contribution, not the closing. So they'll close at that point, okay? And then, but that's why. So it's those delinquencies, equity started to get concerned. They wanted to see them come down. That's the fact pattern. That's what happened. I talked to Venkat yesterday, and he was telling me that about a couple of the folks that are delinquent. One of them's a teacher, and one of them is a line worker at the Tesla factory that I passed on the way down here. It's exactly who we're supposed to be helping. And for those folks that are 60 and 80% AMI. Remember, once the partnership goes in, their next lease, they'll be able to renew at those lower rents. So it's frustrating because Steve, I know that you have projects you want to get knocked out, so I know it's frustrating for everybody, all of us. But it's exactly the cause is exactly what we're trying to solve, which is it kind of makes it even more frustrating in a sense. So that's what happened with the closing. I sincerely apologize. Stryker, Venkat at Stryker apologizes. That's the next step. So Equity's committed. They, to that April 10th or before date, they just want to see another report on delinquencies. They're monitoring it daily. Venkat sends them a report every week. They've continued to come down. They've recognized that and committed. So that's where we are.
Okay. All right. Well, thank you, Ken.
What's that? Oh, yeah. That didn't help.
And you're sticking around to the end?
Yeah.
Okay.
Yeah.
Because there's some legislative stuff going on regarding Section 392.
Mm-hmm.
So I think that warrants a discussion.
Yeah.
And I'll hold off till the end.
Yeah, and I'm monitoring that actively. I've been to the Capitol a couple times on those issues. There was a group there today that I work with, there was a hearing on one of the bills on Tuesday, so I'm happy to share updates or what I know.
Definitely keep you up to date on that.
Yeah.
Well, I don't like it, we do work together on this sort of stuff to keep the business going, but.
Oh, yeah.
Well, yeah, I mean, the whole industry kind of has to come together on legislative stuff, It's just, that's the nature of the beast.
Just being part of my full-time job,
Yeah.
I'm very kind of versed in it, and we've been in Washington, and
Yeah.
we'll see what happens.
So if you missed that part, the lender is non-traditional, it's an insurance company.
Yeah, oh, yeah.
So that was kind of the first little dance that was going on, having a non-traditional lender. And then when the collection spike went up, it just, kind of took everything out of kilter. But
Yeah,
I can't speak for the board, but I did let them know that there would be some consideration to terminate the MOU, but I couldn't speak for the board. I'd have to actually talk to the board, so I'm glad that you were able to get a.
I rattled their cage about it because, I know you've got stuff queued up, and that's why I do this for the things we're trying to solve, which is, take care of the properties that you have, give you some more resources to do that. And then folks that are kind of in a tight spot, give them a better rent, And after Darren called me on that, I rattled their cage, and we're moving.
Good.
I was very clear about they're only going to be so patient.
If it was boring, it wouldn't be fun, so.
Indeed.
Okay, and then give you an update on the Calterra property. We
Okay.
did complete, and both sides did sign the MOU.
Yep.
And that's where I know we're at on that, so I guess, Ken, you're gonna give an update on it?
Well, I'll start just a little bit. We are now into biweekly calls with legal. Because I was stuck in traffic, I happened to be able to jump on that call. So we have we have an organizational chart and we have a path. Now, Ken can talk to you about equity and lending.
So I'm pulling up because he sent me the term sheet for their lender while I was on the way down here. He being Nick at Calterra. So first and foremost, on this particular project, the equity is staying in the deal. So that's really good. Unlike what happened with Opal Point, where we switched out the equity partners. So equity staying in the deal. The name changed. And just some background on that. Presario was the original equity partner, and they have a principal partner that is retiring, and he wanted to get bought out, and he wanted to maintain the Presario name for property management. So the partner's going to continue to do property management. They have 7 properties that Presario, the new entity, will do property management on. On the equity side, that principal dropped out. Everybody else is the same. And when they did that, of course, he wanted to keep Presario, so they came up with Club Capital, and that's the name of the entity. So it's the same, everybody's the same except for the one principal, and it's Club Capital. So that's the equity piece. They're staying on the deal. And then he just sent me a term sheet earlier with, let's see here, it's Calmwater, I think, is who they got their deal with. Yeah, Calmwater Capital is their lending partner. So they have the term sheet on the lending. Their equity partners in the deal. They've started. We've started closing documents, working through those. I believe, and Darren, you may know this, I believe that their equity documents are in place. They need to do their lending documents, and there was one other document that they needed to get knocked out, but they're well down the path. So yeah, we're having the bi-weekly calls. I missed this one today because I was in the middle of the rain when it happened, but yeah, we've got the bi-weekly calls, and I would expect them to close. And I mean, given the Opal Point, I'm hesitant to give time frames, but I would expect them to close relatively quickly, meaning 45, 60 days, something like that.
I think that's fair based on the call today. I
Okay.
think that's fair based on the call today.
Okay.
The org chart was huge, so now legal Ryan and his team they know how to draft.
And the org chart kind of explains the principle even. That's, the beauty of the org chart.
All right.
Memorializes it.
I think 45 to 60 is probably pretty good with any
Yeah.
legislative stuff that might happen,
Yeah.
program changes.
I think everybody's aware of that. And, we've had conversations with, obviously, the deals that we're presenting tonight relative. I've been really focused on time.
Yeah.
So, and Gates and his 1595 just made it worse, so.
Because I think there's no doubt something's going to change. Like, it's not going to present as it does today, I don't think.
I don't know, we'll talk about it at the end.
Yeah.
Did Rachel, is she supposed to join?
She's,
Oh, hi Rachel, sorry.
I guess she's on. It's showing you.
Yeah, she's on.
Okay.
And then,
I know she called me and said, I don't have the link, so through that lady's help, I got the IT guy over here, and I gave him her email address, and so she's set up. Then we've got some general information on Charles Young Public Housing. We're 100% occupied. In the last 30 days or so, I've installed, actually it's been less than that. I hired a contractor to install 9 new air conditioning systems, 8 of them in units at Charles Young and 1 in the office. It hasn't worked in some time. And we're going to continue to do that. I did it using capital funds that I set up for 2023. And now I'm going to go back in next week and draw some more funds on 24 and 25 and schedule him to do the remaining 13 units. And then every resident at Charles Young, probably by the end of May, will have brand new air conditioning. high-energy stuff so that it lowers their electric bill but keeps them cooler or warmer, depending upon what they want.
That's great.
So, and then, you know, after we finish that, then we'll go into some other things, but that's, you know, further down the road.
Start with air conditioning. It's number one in Texas. so.
Always is, always is. And that's why I did it first. We've got another new portfolio management specialist with public housing on Charles Young. We had a lady by the name of Shakita Ross, I think her last name was, and she was there for about 6 weeks, and then they moved her. And the new guy's name is Brian Surratt, and I've had a meeting with him on the 26th of February, and we're meeting again this coming Monday. And he's an interesting guy because he's a lawyer by trade, and he's worked for HUD for years, but as a lawyer, not as a portfolio management specialist. So it'll be interesting to see how that all works out. On Pete Dressen, we're 100% occupied. We're waiting on funding to proceed with the exterior work. And evidently we'll have that on April 10th. Or before. I'm not even gonna look until the 10th. And we found that there's been some crime in Pete Dressen, as opposed to Charles Young. And so we're monitoring that much more closely. For whatever reason, the residents don't report it when the police come out. And so I'm monitoring that. I'm actually looking at a couple of camera type systems that you can put in where it picks up license plates and as they drive into the drive. And so we've got 2 drives at Pete Dressen, so I may have to put 2 cameras in. In the last 2 years, we've had 27 police calls over there, which is not a lot for that long of a period, but it's more than twice as much as what we had at Charles Young. And that, you know, I don't know why yet, we haven't figured that part out, but we're working on it. And there's a camera called Flock, F-L-O-C-K, that I've used on other properties, and they have an arrangement with the PD here. And the PD actually monitors the camera also. And if somebody goes on a property that's not supposed to be there, or they're happen to be looking for that license plate number, they're on it right away. I've seen it work well in a property in Tyler, because the Tyler PD worked with the Flock people. Have you ever used Flock? No? Okay. At any rate, that's something I'm working on. The audit is in progress. It should be completed Tuesday, whenever the 31st is, Monday. And it will be submitted to HUD. And there'll be some paperwork for you to sign, Daniel. I'll have them send it to you.
All right.
And they'll send you a draft of the audit as well as a owner's certification that has to be signed. And I'll review the draft before they send it, so that way I can give you my feedback on it. It's actually been pretty quiet on the properties. I just want to get those exteriors started over at Pete Dressen and get that done. And we've been using the funds I set aside every month for that on other improvements on the property, but each building costs, I don't know, $15,000, $17,000 to do. So I don't want to give them one building to do at a time. I want to give them 4 or 5 buildings to do at a time. And so I'm kind of dragging my feet, waiting on Ken. I'm glad you're
Thank you for
here.
your patience. I really appreciate it.
When are we supposed to have an MOR, right? Or coming up? Or did-
We had an MOR last year,
Oh,
and we
okay.
passed it, yeah.
Perfect.
Yeah, I reported that at
Yeah,
our previous board meeting, but we had an MOR, there was couple of findings which we fixed, and it was a satisfactory MOR, so. If y'all remember back 6, 7 years ago, they had one that was so bad, it was just a mess, but once I took over, I fixed all that, and we had a good one this time, so.
The problem is this job's getting too easy for you.
No, it's not. No, I got this other stuff to deal with.
Oh,
See,
okay.
There's other things I do. My job never gets easier. It really doesn't. Now, one of the other things, that's all I got from the management standpoint. There's not a lot to report because everything seems to be running pretty well and, you know, for the most part, pretty quietly. I've already mentioned the Calterra, and Ken gave us an update on that. And then Darren's here. He and I have been talking about a possible partnership with the Strand Apartments in Kyle. And these two gentlemen that are here are from there, correct?
Yes, sir.
Okay. And then also the Windy Hill Apartments in Kyle. And so Darren, I'm gonna ask you to go ahead. You provided all this stuff.
Do we want to check and see if the other commissioner can,
If Michelle's here,
yeah.
well, we can discuss it. We just don't have to vote on it until she gets here.
Okay.
Yeah, I bet she's available.
Well, it's 6:35, so she said she'd be available by 6:30. And I don't know her number. You know her number?
Yeah, she's the, on this group chat.
Okay. That's what I just noticed it up here
Yeah.
on the dummy.
Figure I won't read it out loud for, for the world to have archived, so.
Did she have a link to call into?
Got her voicemail,
Did she have a link to call into?
yes. Michelle, it's Steve Colella, and we really need you here on the Zoom for this meeting, because we need to have a quorum. So it's 6:38, and you had said you should be able to get on at 6:30, and I'm just trying to track you down to get you on, because there's only Daniel and Brad here, and we need one more person for a quorum.
So you don't have any difference, I mean, if you want, we can present the information, but you can't take a vote, and this is archived, so she'll be able to watch it, I'm assuming? Okay, if there's no difference, can the Strand go first since these
Sure.
guys are actually here? So, Michael, go ahead. And Brad, this is because of you. This is because of you.
Oh, okay.
Nice to meet you guys. Michael Becker, our company's SPI Advisory. My colleague, Sean Calloway, is here. I live in Dallas. Sean's in our Austin office, and we've owned the Strand for about 7 years now. We bought it in 2018. And we've owned a few other properties in Kyle as well. We own the adjacent property called the Aiden, as well as we used to own a property called Oaks and Marketplace. And then we also own a property in Buda, own one in New Braunfels, and several other throughout Texas. So we've been, investing and owning and operating in the kind of I-35 corridor in Kyle for, a long time here. So we're pretty committed to the region and the city of Kyle. And if we're fortunate enough to be accepted in the program, we intend to own the Strand for a long period of time. This is an asset we want to be kind of committed to for, the foreseeable future. As part of this program, so we'll discuss with Darren, and Darren will go through the numbers. We're willing to commit some 50% and some 60% AMI units, as well as I think we have $750,000 in capital improvements we plan on spending on the property in the next handful of years that Darren has a budget for. And I think that'll help us both kind of continue to maintain and improve upon the quality of the asset. I just was on the property before I came here, and we painted it about 2-3 years ago, and it's pretty good. But as I'm sure Steve can attest, that those paint jobs wear out over time, so this will allow us and afford us the capital to continue to reinvest into the property, both exterior and in the interior quality of the properties. And then kind of further on that, just a little bit more about us and our kind of, company, we're giving back. Philanthropy is part of our culture. I'm on the board of a charity called Vogel Alcove, and I'm also the finance committee chair of that same charity. And the mission of Vogel is kind of help the young children and their families kind of prevent and overcome the lasting impacts of homelessness. And our company over the last several years have raised well in excess of $100,000. We have an upcoming event that we're real proud of that we do every May. Last year raised about $42,000 that one event alone. So we try to give back and preserve and protect kind of affordable housing for the neighbors and the community of Kyle is certainly part of what we're planning on doing here, and getting into the program certainly will be helpful for that. And so welcome any questions or anything else. I know Darren has a full presentation, but anything on us, our company, or our background, happy to try to answer.
None for me.
No, and I will tell you all that I thought that this was a situation that was worth looking at, because they're gonna do, she's getting on. Says as soon as possible.
Okay, perfect.
Because they're doing a number of units at 50 and 60%. And this is it's not a brand-new property, but it's well-maintained. I've driven it. And I told Darren when we were talking about it, I said, we need to have some 50s and more 60s, that targets a different group of people than what Opal's doing. And so I thought when they came with this breakdown, I thought that was worthwhile. 25 units at 50 and 55 units at 60. That between the two, that's half their property.
That's correct.
So I thought it was worth us considering getting involved with these gentlemen and
Yeah.
going from there. You have any other questions, Daniel, Brad?
Not right now.
Would it be helpful to talk about capitalization or anything like that? Okay.
Should we wait a minute to see if she joins, or?
Yeah, she says, I'll be on as soon as possible, finishing up, whatever that meant. So we just gotta wait.
We can wait just a
We
second.
can do the other one if you want, and then go back to discussing it again, both of them again, in summary when she gets it.
Well, I can just finish this one and then we can summarize.
That's fine.
So, yeah, Brad, when we, at our last meeting, you told me to tap the brakes, on some of, older existing stock, right? And you thought we could extract more affordability. And literally about a month afterwards, I get a call from Michael and I was like, okay. I originally told him no because of our concern with Kohlers. I said, but you know what? Let me call Steve because we had a commissioner that had some concern, and when we start talking about capitalization and definitely the improvements that they're going to add to the property, 50% AMI and 60% AMI, it hit every box that you talked about. So that's why I kind of brought this back to Steve. But my apologies for no page numbers. I hate when I do that, but you can see the property, see the site plan, and then I've kind of given you the 3D Google Earth site plan so you have a little more context. It is approximately 160 units, so a little bit more than that. Exactly 160 units, okay, deal bleed. And then I did want to show you that it is right across from Arden at Kohlers Crossings, but those two properties really serve two different populations. So I believe at Arden at Kohlers, we're maybe 10 at 60, 40 at 80. And this will be a greater skewing. The next page kind of shows you where your portfolio is. Next time you see something, Arden at Kohlers Crossings will be red since we've approved it. And these two properties together only total about 320 units, so it's not like as if we're doing two big monstrosities. The slide that just says the Strand with the address, it shows you when it was built. It's 93% occupied, gives you the 1s, 2s, and 3s. And a little bit different than we did with Stryker and Calterra. They have 120 days to close. And as long as we see progress, if, it turns into 135 days, then you'll have to give them an extension. But we've got to get some finality so that we're not always, when is it going to happen? There's some pictures of some exterior amenities. And then, there's a slide with interior amenities. Pretty unique for a property this size to have a package, a parcel. I can't think what the other part. Thank you. Yeah. Yeah. I mean, that's unique for a property this size to have that. So I wanted to point that out that they expect a certain level of quality with their developments.
Is that a Luxor?
Yes, I believe it is.
Yeah, I use those. I find them to be I find them to be better than some of the others.
You got to forgive the printer, but the pictures are much better than my printer for the interiors. And I'll try to get them so Steve, we can put them up digitally because they'll show much better. So then the next page will be the deal points. 15, almost 15.5% at 50, 35% at 60, and the other 50% will be at market. The fee structures are 15% of the ad valorem tax exemption, an acquisition fee, our compliance fee, and the disposition fee of 1.5% of gross sales, which is fairly standard to what we get on the other deals. Again, the MOU will have a 120-day term, and I think Michael feels pretty comfortable that they can hit that, but at least show efforts to hit it, and you can extend it if you need, if you would do that. As far as the CapEx is concerned, they're looking to upgrade to a stainless steel appliance package, which I thought was pretty cool. Washers and dryers in every unit. Then you got, some exterior cabinetry and paint. landscaping improvements and pool upgrades, and then we're looking at some parking lot items. Whether that may be shaded structures or parking lot repair, is just kind of a couple of things there. Next page kind of gives you a 10-year pro forma with the exemption and return of capital. So the deal is very feasible and doable. The next page shows the public benefit. And this deal throws off about 45% rent savings to the tax exemption in year one. So that's kind of right in my wheelhouse, in between 40 and 50%. Am I losing anybody without page numbers? Are we okay? All right, cool. Next is about SPI. Again, you've met one of the main principals, or the principal, Michael Becker and Sean. The kind of their mission, vision statement, it'll give you, 32 full cycle investments. I mean, these are more investment terms, but, yielding an average IRR of 37%. So they've been pretty successful. They're in 15 Texas submarkets, about $1.3 billion in assets, 76 assets acquired, 16,000 units, $3 billion in total transactions. And as you can see, their portfolio is 23%, along this area between Austin and Kyle and Buda. Did I miss any city?
Yeah, San Antonio.
Oh, San Antonio too. Okay. No, I did, but just this corridor as far as, yeah.
Kyle, New Braunfels, Kyle, Buda, South Austin.
Okay, yeah, so that's 23% of their portfolio. So there's information relative to their company, Michael's background, Sean's background, and then their primary team leads. Hold on, there we go. Management company is Valiant, Steve. I didn't know if you're familiar with Valiant or not.
Never heard of them.
Okay. Always make sure I put a management profile for you.
That's all right.
So there's some information about Valiant. They're not necessarily small, but they're not gigantic either. They currently manage about 35,000 units. Most properties are about 255, $6 billion in market value. Spread over those properties, about 800 team members, 10 different markets served. Interesting, their asset classes are from A to C+. Of course, they, kind of do the gamut from construction improvements to, light renovations and so forth. You'll see their portfolio breakdown. Texas, Oklahoma, Florida, and Colorado are the markets that they work within. And then, some standard information about their kind of in-house recruiting and payroll benefits and so forth and so on. But my calls relative to Valiant were all positive. It wasn't as if, they're a legitimate company that does good work. So that is the Strand.
I like it.
Did we get our Dow in yet?
Yeah, I think we're working on, there's a lot of text coming through, I lost track. How about you, Steve?
Hold on a minute.
Yeah, we'll get that. We already, we've had two Freddie Mac loans on this historically, and the current one. We already have a Freddie Mac quote, or a Freddie Mac quote.
Okay.
Capital's already in the deal,
It's their capital.
we'll close.
Yeah.
We got a process of refinance. We use Shackelford for law firm, to represent us, to engage with, the agency council.
Chapman Color.
Yeah.
Rachel, she's on the phone, and trust me, they all know each other.
That sounds good.
Play nice to the sandbox and get done quick.
Perfect. I think that's better too.
Yeah, I mean,
Sooner the better.
it's amazing, all the councils, I mean, you know, Chapman Color's been around forever, and they know this space really well. Shackelford knows the space well, and I don't know, Rachel, if you know offhand, the number of deals that we're currently working between the different firms. So there's gotta be 10, 12 different deals that they're both working for different housing authorities.
Well, Michelle could not find the link.
Oh, okay.
And so I emailed Rachel and asked her to forward it to me. And then I forwarded her email just now to Michelle.
That's technology for you.
So hopefully should pop up there in a minute.
But you sent some information in your package to the board members, right? It just didn't have the color picture type stuff. Okay.
Oh, we don't read Steve's emails.
Oh,
30 minutes before.
30 minutes before.
Okay. Let's give her a minute. I just sent her a text and asked her if
Okay, I may
she
need
did
that,
get it.
but maybe-
There she is. There you are.
You're on mute, though.
We're gonna go back and kind of start over again in order to approve the minutes from the last meeting. And then we'll give you a summary of what we've been talking about on one of these other partnerships we're considering doing. Okay?
All right, you ready? All right.
I think we need to get her off mute though.
Huh?
She's on mute. I think we need to get her.
Well, she heard me. She shook her head.
Yeah, but then she talked.
I heard.
Oh, okay, perfect. There you are.
All righty. It's 6:56 PM, and we have Commissioner Lopez with us. So we now have quorum. So we'll start moving to our action items. The first one is the reading and approval of the minutes from December 19th. All right, everyone's had time to review them. Do we have a motion to approve?
I'll make a motion to approve the December 19th, 2024 Kyle Housing Authority minutes as written.
All right.
Second.
And Dr. Lopez will second. All right, hearing no opposition, it passes. We've done citizen comment. And so now we're up to new business. The first item is the consider and possible action regarding finalizing the partnership with Calterra Capital Partners. Steve, you have anything you want to add as commentary on this, or?
Well, we've completed the MOU on Calterra, and it's been signed by both parties, and that was, the board gave me permission to, or instruction, to do that in that December meeting. And so I've completed the MOU, and from what I hear today, that it will probably close in the next 120 days. Is that right, Ken? Certainly, yeah. So that's that one. Now, the Opal Point still has not closed. It's, setting a world record for how long it's gonna take. But Ken assures us today from an email or text he got about an hour ago that it will close no later than April 10th. And he explained why the delay was. Evidently, there's been a tremendous amount of evictions filed in Travis and Hayes County at the end of last year. And I know why that happens because I've been in this business for so long. People don't pay their rent, they buy Christmas gifts. And then they get evicted. And so there's been a high rate of evictions. And it scared the equity partners that they backed off a little bit and wanted some more research. And Ken has provided them the research. He gave us a copy of his report that shows that the evictions are coming back down. That's a December, January kind of an issue. And so now they've agreed to definitely close no later than April 10th. So that takes care of that one, hopefully. I'll let you all know when I see the money in the bank.
Steve, I wanted to make sure I'm 100% clear on that date. I looked back at the text, and they told me the week of April 10th.
The week
That's
of April.
The week of April 10th, that's a Thursday.
Okay,
So it could potentially be the following day, the Friday,
that's fine.
the 11th. So I wanted to make sure that
All right.
100% correct.
Okay.
Yeah.
And then after that discussion, Michelle, then we asked, there's two other properties that I've been working with Darren Smith on to partner with. One of them is called The Strand, and it's almost directly across 35 from that Arden at Kohler Corners. It's an older property, and what appealed to me about it is a couple of things. One is they maintain it real well. It looks really good. They're gonna put about $750,000 into it as far as improvements go, as soon as they close. And the most important part is they're gonna do 50 and 60% affordable rents instead of 60 and 80 like they're doing at Opal. And that to me is, having those 50s in there is real important, because that serves a whole different segment of people that we have in Kyle. And so those factors all being considered, I think, that it's something that the board ought to give me the approval to work on. But that's up to y'all. He did bring a nice package of information, which I'll be glad to email you if you want to look at it.
Thank you.
And, but I think it would be a good program for the Housing Authority to get involved in that. And it'll bring some more cash into the Housing Authority, which we can in turn use to improve, Pete Tresson and Charles Young, and which is, my ultimate goal. So that's where we're at on that. We're actually in a position for Darren, if you want to step up and make any final comments and see if Michelle has any questions.
Yeah, Commissioner Lopez, as kind of the financial metrics that we established with the first two deals, this property is right down the fairway as it relates to our fee structures and how they work. 15% of the ad valorem tax exemption comes back in the form of a lease payment. The acquisition fee is 75 basis points, or for a number there, it's $180,000. The compliance fee is its normal fee, and the disposition fee is based on 1.5% of gross sales. And again, we don't know what that number is going to be 10 years from now. They may want to extend in the program longer, but right now in 10 years, it's estimated at about $750,000. So it has a public benefit of 93% with total fees, and 79% if you do not include the disposition, which is kind of right in our sweet spot as well.
Okay. And this is very comparable to the December one as well.
Actually, this is, from an economic perspective, it's a smaller property. It's only 160 units, but 15.5 are at 50 and 35% are at 60. And then the other 50% is market.
Okay, thank you. Okay, I appreciate that. Thank you.
Okay.
All right. Without any other questions, do we have a motion on Calterra?
No,
Calterra,
Strand.
you're at the Strand.
Oh, we're taking these out of order then. Okay.
Calterra,
Because
we
they
did.
were here, I didn't want to say.
Okay, I'm sorry. I thought we were just going, okay, yeah. All right, do we have a motion on 5C for the Strand?
So the motion is to go under an MOU, right?
Exactly.
They sent over a resolution, the motion, Rachel?
Do you have that resolution?
What?
Do you have the resolution?
I do.
You sent it over?
I've got it.
Oh,
I've got it. Yeah.
So the motion, I think, relative to the resolution.
It's a standard resolution, just like the one we did on Opal and the one we did on Calterra.
Yeah.
So,
They're trying to make a motion. The motion would be
so it's the resolution, not the MOU. Or I'm switching that up.
well, you're gonna provide the executive director, with, you're approving the executive director to negotiate an intergovernmental for the Strand.
But we don't have in the packet the resolutions. Was that something sent separately to us, Steve?
no, I did not send you these.
Okay.
Actually, I gave them, I think I may have given you, did I give you a copy of these? No, I didn't. But it's a standard resolution, just like the one we did on the others.
Okay.
I've compared them both, all three of them, and they're, other than the names and the locations, they're identical.
Yeah, but what we're being asked of is if we're gonna authorize the executive director to enter into an MOU
Right,
with
Strand.
Strand.
right.
So I
Could
think,
you read that last section, not the whole resolution, but the one that really gives what we're authorizing?
The other, be it hereby resolved that the executing officer is hereby authorized and directed for, and on behalf of, and as the act in deed of the authority to take such further action in the consummation of the transaction herein contemplated, and do any and all of the other acts and things necessary.
Okay. And we list your role before that?
Yes.
Thank you.
And what it does is it gives the
I
executive.
can jump in. This is Rachel Jensen from Chapman and Cutler. And apologies, I don't think my camera is working. So there's three items. It is, as Steve noted, it's the same as the other resolutions that you all have approved for the Opal Point and Arden at Kohler's Crossing transactions. But so it would authorize Steve as the executive director to negotiate and execute the MOU and authorize the formation of the two limited liability companies that would participate in the project. There would be a managing member entity that would be admitted as part of the borrower, and another entity that would own the land on which the project is located and enter into a lease with the borrower. So similar to the same as the structure on the other two transactions as well.
Thank you. I appreciate that. I just wanted to make sure that what was written was what since we don't have it in front of us. That's correct.
So you want to take a stab at it?
don't be cheating.
Huh?
You can't use your notes.
Look at all mine. Can you read that? I'll make a motion to approve the resolution and authorize the Kyle Housing Authority ED to enter into a MOU with the Strand ownership entity to further engage in the partnership.
All right.
So we're gonna adopt that resolution. You said something in the middle, Brad?
Motion to approve the resolution and authorize the Kyle Housing Authority ED to enter into an MOU with the Strand ownership entity to further that partnership.
Okay, all right. A second to adopt the resolution.
Okay.
All right. Hearing no opposition, 5C is approved related to Strand Apartments. Yeah. No opposition, so we're moving. So, all righty. What would you like to get next? We got 5A, 5B, and 5D.
Let's do 5B.
All righty. All
Thanks for
right.
coming, guys.
Thank y'all. So we've got consider impossible action regarding the consideration of a partnership with the owner of Windy Hill Apartments in Kyle.
So, again, Commissioners, a unique opportunity. This deal is approximately 136 units. New construction. They are approximately, when I started working on this, they were about 75% complete with construction. And they've started some lease up on some of the buildings as they've gotten TCOs. But as you can see, Google Earth hasn't caught up with it. It's just a pin in the middle of a field. But I wanted to kind of zoom in, zoom out to give you a look at where it was. And of course, the next picture shows your total portfolio. I think given the size of Opal Point, and then the three you kind of have Northern, I mean, you may have 100 units more, so I don't think it's a real issue, and it's definitely not a concentration issue. So, as Steve knows, I look for that. Key stats, project cost is $23.25 million, 136 units. You know, standard utilities and community amenities, clubhouse, swimming pool, patio, barbecue, fitness center, storage areas, and a dog park. Unit mix is 1s, 2s, and 3s. Property type is garden style. I think it's a 3-story walk-up. Yeah, 3-story walk-ups. Construction is, you know, cement board, stucco exterior, double pane windows, pitch roofs. They're doing some lighting, energy efficient LED stuff, 9-foot ceiling heights. The interiors that you see are renderings, but I did include some of their existing product so you could see that they can actually build. Again, it's a $23.25 million project, and these are the owners. They're not selling. This is a unique situation. SPI currently owns the Strand, and these guys currently own Windy Hill. So it's not a buy-sell transaction, and that's unique. They're keeping approximately $7.75 million of equity, of their own equity, into the deal. Deal terms. This one's kind of unique. 14.7% at 60% AMI and 35.3% at 70% AMI. But I want to put a pin in that because I want to explain a couple things to you in just a minute. Relative to the fee structure, the annual lease is 17% versus 15%. The acquisition fee is 75 basis points as normal, and that equates to $174,000. The compliance fee is reduced because there's 136 units, and I was driving more money to the housing authority, so I reduced that number to $100 per unit. And then the disposition fee is 1% of net sales, not gross sales. So when I said I want to put a pin in the AMI differences, while they're going to be restricted at 60% AMI, there will be another caveat that it'll be the 60% AMI rent and income less $75 a month in rent. So it actually equates to 57% AMI with today's rent calculators. And that will be memorialized in the documents. And the 70% AMI rents will be $100 less per month. So that's an estimated 66% AMI. So more 50s, more 60s. And that, again, will be memorialized in the MOU and the documents going forward. And I gave them 120 days, just like I did the Strand. So Commissioner Lopez, one of the things I didn't say with the Strand is, unlike Coalish Crossings and Opal Point, we didn't give kind of a termination date for the MOU. So, you know, if things don't go right, they just kind of kick the can down the road till it goes right. Both of these have 120-day clocks on them.
Okay.
And you can, the board can, as its discretion, extend if they're making progress.
Okay.
Yeah.
Can you just share quickly, I don't have those documents in front of me, where the location is on Windy Hill, what maybe some landmarks are?
Can she see, like, on your screen or anything?
I don't know.
I don't know if anybody can share.
It's about a mile.
You know where the Poco Locos is at Windy Hill and Dacey?
Uh-huh.
It's just to the west of that,
Okay,
on Windy Hill.
Yeah, contiguous, yeah, right there.
It's about a mile off 35, which I thought made it an acceptable, you know, it's not right on top of the highway.
Are they under construction
Yes.
now? I think you're on the wrong. I think you're on the wrong corner.
I actually sent those slides to,
To them?
yeah. So typically, you don't get an address, right? Until,
Well, if they're under construction, they should.
well, they should, I mean, yeah, but I mean, yeah. So
okay.
they've at least verified that that's where it is, but, yeah. So we're either right next to the Polo Loco or across the street, on the same side of the street.
Okay. All right, thank you. That orients me.
Okay. So those are the deal terms. So we're still looking at, you know, 50s and 60s rents. And so there are no 80s in this transaction at all.
And again, that's another reason why I thought this was worth taking a look at too. Because of the 50s and 60s.
So the taxes were calculated on a cost method. And so this property, given the rent discounts that they're offering, actually is 61% of the ad valorem taxes is going into rental savings. I just hadn't seen that. And again, that's on the cost method, but I just hadn't seen it. So overall, it's got 107% public benefit and a 79% benefit less disposition. And that's why the disposition is of net sales and not gross sales. So 10 years out, that number is $407,000, but we don't know where cap rates or interest rates are gonna be. But that's why it didn't go gross. We were getting such, they offered those discounts off the rents. That wasn't me, but since they did that, it just shot the public benefits through the roof.
So how is that seen though? Like, they're reducing it by $75 and $100. Is that like an advertised rent that's already gonna be reduced, or is this a lease signing, or?
Well, I can tell you from a compliance perspective, I'm gonna take the Novogradac calculator and I'm gonna back $75 off the rent, and that's what I'll be looking at on their lease.
Well, it's based off of AMI. right?
Yeah.
So whatever the AMI is, and then I guess minus.
Yes, that's exactly right. That's what I'll be looking for.
But I'm just saying, how like, me as
John, how do you
knowledgeable
know
about
that?
this, I'm gonna know about that, but
They'll have
a
to-
resident going in is not gonna really know, right?
Well, they'll have to know, they may not know it's $75 off the lease, but whatever rate that they're offered for their lease will be $75 off that 60% AMI and 100 off the 70.
Yeah,
Otherwise, they won't be in compliance.
yeah. I'm just saying, a lot, everybody, not everybody, a lot of people look at price first. And
Yes.
if that's not capitalizing your advertised rent, right?
They
Or,
would just,
or am I you're losing me somewhere?
No, I think
true.
you're right, and I would say, sorry, from my perspective, sadly, I do think Kyle still makes less money than what the AMI of our
Yes.
region is.
No question about it.
Yeah,
Huh?
No question about it.
So 60 and 70% of the whole region, honestly, these lesser rents are probably just a little bit more in line with maybe what our people are making anyway in Kyle. You know what I
Yeah.
mean? Because you're looking at the AMI for the whole Austin Ramrock region, not what the AMI is of Kyle.
yeah.
and I would suspect that there's a lot of people that live in Cal that work in Austin.
Oh, yeah.
Absolutely. However, when you still look at, what our area meeting is.
Oh, absolutely.
It's less here in Kyle.
Yes,
than it is.
yes, we know. We've discussed that.
Yeah.
I
But
just,
so-
I
so-
have a very heavy compliance background, so that just seems like a nightmare.
We'll get it done.
Yeah,
No, actually, it won't be that difficult. I mean, we'll just know, we'll note that property, and we'll notate it in our database just to automatically subtract whatever the calculated rent is from the calculator. That's why we use Novogradac, so we know we import that stuff.
Yeah.
And then we'll just have a trigger that it'll just deduct $75 off the 60s and 100 off the 70s.
yeah.
And if they are charging more rent, so you can have a 60% income, but your rent will be effectively 57%.
So a potential residents just, they're not gonna know.
Right.
They're just gonna see the advertised market rent. They'll find out about this if they qualify at lease signing,
Exactly.
Exactly.
which could make a decision on where they go.
Oh,
At
absolutely.
$100, 75 and 100,
Absolutely.
yeah,
Yeah. So, and it's new construction, so, I mean,
yeah.
yeah, so I mean, I just thought, I thought it was a tremendous opportunity, and it's amazing that we're seeing a shift from buyer-seller transactions to owner transactions. And I think that's, quite frankly, with Kyle, it's not uncommon because they're the owners now. So there's no leverage date, right? So they're not in contract to sell or to buy. And
It's a more
that,
stable client is what.
it's a
it
more
is.
stable client, but deadlines make people react.
Right.
And if they had a purchase agreement, and that purchase agreement, the money was hard, and they had a closing date that was X date, then I think we'd see some faster movement, which is why I wanted to put the 120 days in these documents.
Okay.
So, the sponsor team, Rajiv and Rakesh, that's how I'm gonna go by that. And then kind of the partner is David Tucker. He's kind of a money management partner for them. The previous developments, and this one I thought was, I mean, the picture really, the digital picture is awesome. This is a hotel, Commissioner Lopez. It's probably a 12-story hotel, maybe not that many, but yeah, probably close to 12-story. And you can tell it's built probably mid-'80s. And they converted it into a senior living facility, and it looks gorgeous. And I can tell you from experience, from my development background, hotel conversions are some of the toughest conversions there are because of the way the plumbing and the systems run. So it's tough to create a, 2-bedroom unit with a hotel conversion. It's just tough. So I actually, you know, at one point in my career, we did one, and I said, that's it. I'll never do another one. So, I mean, just cost overruns, you name it. The next picture behind the hotel would be some of the actual amenities. Those are actual amenities, not renderings. That's why it was important for me to get actual product. The next one is Hollyview Apartments, which is similar, two-story walk-up garden style. And these are indicative of the bedrooms and unit types in Hollyview. Management company, I believe, if I'm not mistaken, based out of Houston, Q10.
Right, I've heard of them.
Okay, you're familiar with them? I just, because of your background, I always want to make sure that I get something on management. 5 cities, 57 communities, almost 8,000 units, about 215 team members, more regional for sure. And they have been in the affordable housing space, which is important. So the compliance aspect of it is not going to be foreign to them. And they've actually got some PFC properties which are similar to 392s in their management portfolio. So any questions regarding Windy Hill?
None from me.
So just knowledge here. So when we were doing Opal, we had in the financial sections a breakdown of like vouchers and stuff. Was that because they're already occupied? And the voucher numbers are already there, or did they commit to that number of vouchers? I just don't see the voucher.
Yeah, on deals like that, I make them commit to a percentage of vouchers, but every development has to accept vouchers.
Oh, yeah, for sure.
I mean,
Yeah. Oh, yeah.
yeah, every development has to accept.
It was lined out in Opal and not really lined out.
And it's lined out in Arden too,
Okay,
Culver's Crossing, because those are new, bigger developments. I like to set that standard up front.
yep, okay,
So there are vouchers at the Strand right now.
okay.
So they're just gonna continue with that. for the
Exactly,
voucher.
yes.
Yeah, and I remember, Brad, for Opal, us talking about the vouchers and making sure that was a part of it. And what that, we talked about with the numbers or the percentages.
Yeah, so larger new developments, I just want to be clear with those folks that there's going to be a component that are vouchers. 160, 136 units, they know they have to have vouchers. They have to accept vouchers. It'll be written in the documents. It'll be captured in the MOU. But I didn't try to put a threshold on them because they were already at 50% rents and 60% rents.
I just had a quick question. So, you know, when we talked about Opal at the beginning, we knew that there would be some possibilities once we got down the road of other things. Is any of this happening in, well, I know Buda not, but with San Marcos, are they seeing some of this as well, these types of agreements?
You know, it's interesting you say that. I would probably say yes, but I would probably say it in essence that it is not the city's municipality or housing authority or Housing Finance Corp that's doing it. It's the traveling HFCs that are coming in and taking assets off the tax rolls and taking those dollars somewhere else.
Okay. Yeah.
Yeah, that's
appreciate
what makes
that.
this unique, because we're putting the money right back into the housing
Right.
authority's properties.
That's right.
But this is reducing the ad valorem taxes
No, it is.
that's coming in, you know, that's supporting these. So I do think there's now some talks of, you know, about the different entities that are doing out, you know, city services and different things that, you know, plan budgets that do this now have, you know, lesser budgets coming in to support police and fire and everything else that's coming in to serve these units as well.
So I would say that is something that was my initial question when we started with Opal. Looking at the emergency services, any other kinds of things, how would this would really impact those things? And I don't know if there's any conversation, I'm not sure where we are that we could potentially address that with some of these, because it is reducing that amount when we have such high growth and we're looking for, yes, affordable opportunities for housing, but also ensuring we have the services and they have a budget to be able to support the new growth and the new residents.
No, you're 100% right, trying to balance the scales. What I would say is, this is just my belief. Neither one of these sponsors said this to me, but it is my belief that had you not been willing to entertain these, that they may have used a traveling HFC, which is still going to be available until there's a vote. And if there's not a 2/3 majority vote, then traveling HFCs will stay in business until sometime in June, July.
Yeah, there was an article in San Antonio paper Sunday about the Pleasanton,
Pecos, Maverick,
Right.
and Cameron, and Edcock.
and the city of Pleasanton created this Housing Finance Corporation. They've been running around all over the state buying up apartment complexes and then getting the tax exemptions.
The city of
They're
Edcock.
not putting the money back in the city.
They're not putting the money back into the city. And that was, I guess, what I was trying to get across is that neither one of these sponsors said, you know, well, if they don't do it, we're going to go. Neither one of them said that. I'm just telling you from a gut perspective that I do believe that they would have tried to do that. And so this is a better situation than the alternative. And the alternative is going to be in place until they pass 2/3, or they vote on it and 2/3 majority vote wins. And then it'll go into effect immediately once it clears the other house, right? Or the Senate or the House. So it could actually go into effect sometime in May. But
Yeah.
I think, you know, it could stretch out till June, July, because if it doesn't get 2/3, then the governor's got to sign it.
If they get that.
Well, we'll talk about that. So
And
let me
okay.
let you make a motion on this, and then we can wrap up kind of the legislative piece of it.
All right.
I'll hold it. I'll hold my comment.
All right. So we're on 5B, Windy Hill. Do we have a motion?
I move we adopt, and this is a resolution as well, correct?
Yes, ma'am.
Correct.
Yeah, I'll just use
Okay.
the same language that Brad used on on the other one. Is that all right with
Okay.
you?
That's fine to adopt that resolution related to the Windy Hill Apartments in line with the language used for the previous one for the Strand.
All right.
Second.
Second. Any opposition? Hearing none. 5B related to Windy Hill Apartment passes. All right.
Okay.
All right. So we got two more. We got 5A and 5D. Steve?
Well, the 5A,
5A, yeah.
there's nothing, what do we need? Is there anything we need to talk about on Calterra?
Until we get loan documents, that's what I said, we table that. Until we get loan documents,
Right.
council will, they're not comfortable sending a resolution until
All right.
they've got the documents in somewhat final form.
All right, perfect. So on
Okay.
5A, we're gonna pin that item for future consideration. And that gets us to 5D, Steve.
Well, do you guys, I mean, you're welcome to stay.
I didn't know if you wanted to have any legislative conversation or not.
I think it's important, just in
Yeah.
case
Yeah. I
members of the
agree.
board aren't aware of kind of.
Let's do that before we do 5D.
All right, cool.
Okay.
All right.
And then you can give us the vote.
Come on up.
Who's the young man sitting next to you?
This is, hopefully one day the heir apparent. He's the prodigal son.
Okay,
He's came home. That's
okay.
Alexander Smith.
Nice to meet you.
Nice to meet you.
I mean, feel free to chime in when you want. So there are a number of bills that have been filed for 394, We know Representative Gates has filed 6 303 bills, but they're really only 2. It's just how he, or excuse me, 3. It's just how he broke it up. And then he decided on the 17th, which was the last filing date, that he would file a bill 1595 to essentially eliminate Section 392, which is what you operate under. Look, anytime a bill gets filed,
I would say instead of eliminating, making it, rendering it not feasible.
Not feasible.
There are income restrictions that just aren't really feasible. You can lose the tax abatement for certain things. It's just, so it's not an outright elimination. It's just kind of creating hurdles that really don't make it practical.
so for me.
Probably a technical difference, but.
It's a technical difference. For me, it's an elimination because it's such a fine line that you have to hit. I mean, the metrics are impossible, you know, so it's yes, okay. Eliminate maybe is too strong of a word, but how about practically in front of it? So, you know, we've engaged, or we're discussing with a lobbyist that we know in town. And you may know him, Mike Warner. Yeah. So we're talking with Mike, trying to see if we can get Holland and Knight, you know, get a group of people. You know, there are a couple housing authorities that are considering it, but you know, since can't get you guys paid, I just didn't put you on the list. But so we're trying to pull a group of people together to potentially, you know, have Mike go and minimize any potential damage or eliminate the damage if possible. I mean, you know, it still has to get out of calendars, it's still got to go to committee, and it's got to get out of committee, and there's a lot of things that can happen in the meantime, right? But left unchecked, you know, it could get out of committee, and it could go to the floor for a vote. And a senator could prepare a companion bill. He doesn't need a companion bill right now. He needs to just get out of the House. And, you know, I can't tell you the probability of whether he will or he won't. I just know he is rabid about these programs. And, you know, I truly get, you know, 303 and the PFCs because of, again, Maverick, Cameron County, and those counties that created these roaming PFCs. So I get trying to make them jurisdictional, but that's not what he did. He not only made them jurisdictional, he put in certain guidelines and AMI restrictions that and CapEx improvements that really, this only works for a certain type of new construction for the 303, right? For the 394, he's made it worse. And then he made it even more, it's not even a word, he made it worser for 392 because 20% of the units have to be at 30% AMI?
No, I misread that originally. That's an option.
That's one of the options.
So you can do 10 at 60, 40 at 80, or, and then the rest of the market, or 20 at 30 in the rest of the market.
But on an acquisition, there's still the 15 to 25% CapEx.
So you have to do 15% of the purchase price in CapEx. You can, the safe harbor for that is 25% of the units at 60, 40% at 80. So 65% of your property is at.
And then they still have the language that says it's a 30-year lease with a.
Yeah, so acquisitions are 30 plus 30.
You have to ask for the other 30
Yeah,
though.
you have to, between year 26 and 30, you have to ask for the other 30.
So that's kind of what's happening. House Bill 21 was for HFCs, and I'm not sure it went really well in front of the committee. I don't think it was well received, but again, I don't sit on the committee, so I don't know how they thought. And it didn't get a vote to get out of committee yet.
So House Bill 21, the original 394, the original 394 Gates bill did not get a vote in committee.
Right.
Interestingly enough, House Bill 1585, so 1585, not 1595. 1585 is Chairman Bell's bill to eliminate the traveling HFC. So it's kind of a clean bill, if you will. It eliminates the traveling HFC and then doesn't touch anything else. That did get through, that was passed out of committee. And then they have not heard 1595 yet. 1595 is the one, the 392 bill that Gates.
It's been recommended to committee, but we don't know when the committee will hear it. And our goal is to, create some opposition that maybe they never hear it. I don't know. So we're hopeful that 1585 gets to the floor and doesn't get hijacked, like the PFC bill did in 23. I do know that TAP, I'm on the executive committee of TAP, if you're familiar, I know you're familiar with TAP. I think we're looking at a firm to just watch the bill, be at the readings for points of order, so somebody just doesn't come and hijack the bill. We're just hoping that one gets through, and we're hoping we can get somebody, on 1595. There is one other bill for 392, but it is jurisdictionally related. So right now you can operate like 5 miles outside of your city boundary, and if there was ETJ land. And so there's a bill to limit it just to your jurisdiction. And that might get through. I mean, it's kind of the same thing that Chairman Bell did with the HFCs, which is just make it jurisdictional, nothing else. And so I'm okay if that one gets through, because, the counties can take care of the counties, but, I just, we just don't want any other stuff that he's trying to throw at it. And, a lot of his self-preservation, because he has a huge portfolio in Houston. And, I don't know the classifications of his assets. I just know that he was overheard saying, there was a property that had a coffee bar. I can't offer a coffee bar. So that's kind of, unless, did I miss anything from a legislative perspective? So.
Only that HB 21 does have a Senate companion bill, that court bill, 1595 does not.
But again, if 1585 gets out of the House, somebody in the Senate will be a companion to it. They bundle, yeah. They'll horse trade at that point. So we're rooting for 1585. But I was going to give an example. Edcock, the city of Edcock, has 1,200 people. Between Thanksgiving and January 1st, they pushed 50 to 60 deals through their little pipeline throughout the state.
Well, aren't they buying some single-family homes in some of this with it?
I don't know. It has to be essential housing.
That's a broad definition.
I know. So,
Stretching legal terms.
Yeah, well, I think that's the issue with it.
yeah, so that's kind of what those out of jurisdiction, HFCs, there's got to be a pipeline. They probably close 400 deals maybe around the state. And it's amazing when I'm doing my research for things, I'll click on some apartments, that, you know, maybe another housing authority's considering putting in a 392 structure. And so I kind of want to know, what's this one, what's this one, the ones that are close. And then you find, Maverick County PFC. I'm like, what? And then you find Edcock HFC. So I don't know that I recommend to a housing authority to do a third deal in that market. There's concentration. So anyway, that's what it just blows me away when I see that stuff.
So those are the three bills, 21, 1585, and 1595, and there's nothing from the Senate?
Yeah, there's some Senate companions. I just don't know them off the top of, yeah, there's a ton.
Yeah, if you go on TLO, they'll put it up. 21 and 1595 have, and 1585 have companions.
Yeah.
I just added them to my bill list for these.
I would say, I looked at a list last night, and it was landscape, but there were 4.5 pages of bills, both House and Senate, related to either 303, 394, or 392. About 4.5 pages. Most of them were 394, and some LIHTC Section 42D, low-income housing tax credit stuff. But yeah, there's a lot of housing bills this year. A lot.
Yeah, they're 42 just on 303. Okay, all right.
Okay.
I was just gonna ask, so just so that I'm clear on the projects that we have been working on, they've mostly been 392s?
They've all been 392s.
All 392s, okay. I just want to make sure we didn't have any others. All right, thank you.
Do you have any specific, Rick?
No, I was just, I got hung up on the tax stuff originally too, and then, you kind of step back and look at it. So you still are providing housing to teachers, you're providing housing to those students, you're providing housing to the fire department staff, police department staff. So it is unique, in how commingles itself together.
Yeah, you know what, and I would say that in the years that I've been doing this, obviously we do audits as well for PFCs. And I had a guy send me his portfolio today. And it was the first time that there was specific language in a regulatory agreement that allowed for student housing.
Huh.
Yeah, that was a new one. And he's got 13 deals and he did them all with Texas Essential Housing. Yeah. So traveling PFC.
Yeah.
So, but it
Interesting.
allows for student housing, and that just kind of shocked me right there. So, all right, any questions?
I don't think so.
Free to head back north.
Have a good drive.
Be safe.
Thank you. Yeah, hopefully the rain will slow down. We'll be in touch.
Yeah, I'll talk to you tomorrow.
Yes, sir. I'll be ready.
What's your name?
Alex Smith,
Okay.
that's PCABC.
I can see the resemblance.
Oh, he looks like it. Thanks, guys.
Thank you.
Thank you, Mr. Lopez.
Thank
Come
you.
back.
Good seeing you.
Thanks, Rachel.
Ken, good seeing you.
Thanks, all.
Okay, now.
Chairman
Go to
Harper,
D,
can I just,
5D.
May I
think we
just-
should.
Hey, Michelle.
oh, hello?
Okay, you're
Yep.
good.
Okay, I just wanted to request that we put on a future agenda. I'd really like us to look at where we are now financially and with these projects that we've had, just looking at, for our sake, what is it that we're expecting and understanding truly with Steve, what are all of the projects and the priorities we have? So that's really clear as well, how we're actually bringing in the income and using that for the properties.
Yeah, all
I'll
right.
do that.
Yeah, and so presumably we can talk about 5D, and if we want to, push approval of 5D until we can get a holistic view, we can do that. So, presumably. I mean, that's where you're going, right?
I think so, just so that we're doing our responsibility of, okay, we have had some really good projects coming through that we've approved. Can we just take a look at where we are in long range? How are we going to, what are we expecting to do with all of this? So we have sort of a plan and we're clear about it.
I think that's real fair.
Yeah, because we haven't had for so long and start kind of
We haven't had any
earmarking.
money, so.
Exactly.
Yeah,
We've never had it.
which could be difficult because it is an influx of capital that we're not used to seeing, so.
All right,
We may have redevelopment in the future.
all right, well, we want to move on to 5D?
Well, I was just gonna suggest that we table it because
Yep.
the Opal Point deal hasn't closed yet, and so it's kind of putting the cart before the horse.
All right, so we'll table 5D.
Table it to the next meeting. I got no problem with that if y'all don't.
All right.
Okay,
I've got nothing on my mind on executive session unless the other fine individuals with me have anything.
Nope.
I have
So-
nothing.
So nothing with Opal Point's gonna require us to get together again, right? Just something with Windy Hill and Strand.
That's correct.
That would be before a regular schedule.
Once Opal Point closes and the money transfers into the Opal Point bank account, then I'll let you all know and we can have a meeting sometime after that. Doesn't have to be right away. I've already told you what my plan is, you know, to get the payables current and start doing those, finishing those buildings at P. Dressen. And once we have that money, I can do that. And we can have a meeting in 60 days. And by that time, they'll have some stuff ready for us on Windy Hill and the Strand and Calterra.
All right,
Is that reasonable?
yeah, reasonable is,
and I wonder if, right
can we
before
do-
that next meeting, if we are
can we
gonna
do
bring
an
5D
executive?
to the next meeting, we may want
No,
to
you
just do a
can't.
bit of a workshop on,
Once,
yeah,
range.
I agree. Yeah, I'll get with Steve on the next date and we'll back into doing something in executive session to make sure we're ready, so.
all right.
All righty. Next on the agenda is Brad's favorite, which is adjournment.
That's yours.
So it's 7:51 PM,
Motion to adjourn?
and we've got a motion and a second. And hearing no opposition, we are adjourned.
Thank you.
Thank you.
Well, really appreciate it. I know you
No, I
got
apologize.
working on something else.